Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Tuesday morning pre-market webcast. Okay, let's start off with a daily chart of the E-mini, and we'll move on. I've got a 30-minute chart I want to show you as well. But you can see here, those of you that if you haven't joined us the past couple of weeks, we've discussed this floor. You had a floor down at 1981, 1982. You had another floor at 2081, 2082. The third floor developed at 52.53. Once that floor developed, unlike the other two, you had compression. Just kind of this flat trade that's been driving everybody crazy for the last 10 days or so. You saw an attempt yesterday in Globex by the bulls to break out of this range between 52.53 and 68.69. Instead of breaking out and running and converting the 68.69 into a support area, they failed to take it out, and they closed the day right around but underneath the new weekly pivot at 64, 64.60, 64.5 area. What we've seen in tonight's Globex was an attempt to move back up to 68.69 that again failed as resistance. Let me move this in one. So here, they go back up to 68.69. Looks a lot like these days, right? 68.69 holds. They come down, they print as low as 57.5. And right now, we are toiling right around the 59.60 area. The weekly pivot didn't hold it on the way back down. And now, over the balance of this week, for the first time in a long time, by Tuesday morning, we've spent far more time below the weekly pivot than we have above the weekly pivot. So this puts the bears in a position, same position they've been in the last couple of Tuesdays. They've got two jobs. And you can see them pretty clearly here on this 30-minute chart. So these lower highs keep forming. Here's your weekly pivot. Here's the floor. Here was 68.69. You can see where they spiked above, couldn't get it done. 71. Then another attempt failed dead on 69. So these lower highs, this lower high, all relative to this high. That's not bullish, guys. Now, I'm not getting all bared up here. I'm just saying, here's how it sets up. And here's how you'll know if the bears have a chance to move things back to the mid-band on the daily chart, which sits right around 50. So right in here, you've got the mid-band on the daily chart. The bears must seal the weekly pivot as resistance. They're trying. Then break the floor. Here's your floor. Nothing matters until you break the floor. And as you get out on longer term time frames, I've had this up for like 3 weeks. Any pullback is noise, absent daily mid-band conversion. That's the green line. We talked about how yesterday this line is coming up to meet the floor. So now from 50 to 53, you've got this support area, and it is a big deal. If all the bears can muster is a move back to 50.53 that holds, then that could give the bulls the fuel to take it to new highs. If the bears can convert this entire area, seal it, and make a nice follow-through push down, I think it opens up a move back to the lower band on the daily chart in the area right now of 2104. This will continue to rise, and it would rise to meet price. So we're in a critical juncture. We mentioned way back here the bands are ready to compress. The bands did compress. They're at about 4.26. From that level, the bands can start to expand again. So what happens when the bands expand? Price expands. Price compression, compression, expansion, compression, expansion. That's how futures trade. Compression, expansion, compression, expansion. Big old bounce, but now we're back into compression and expansion. Okay. All right. Everybody have a fantastic day. Follow us at Twitter at Princeton Trader. Check out the website, princetontrader.com. Come check out the chat room. New month, a lot of trials. Come on in. Come check us out. It's a great bunch of traders, and we would love to trade with you. If you want to trade with us every day, come on in. I will be back tomorrow morning with another webcast. Trade 'em well, everybody.